try to create many portfolios, and we've got facilities, you know, all the way from up here. You see where Pete's at right here, and he was up here, and then we've got facilities down in this area as well too. So like we've got one person to manage like these facilities. Actually, we've got one person in Florida, one person in the South Florida, one person in Central Florida, like I guess South Central, Atlanta, and then one person in the North. So we've got 5 boots on the ground people. Okay. So that's kind of how it is. And we're in the process right now of buying a couple facilities over in this area. And so we'll probably have to get a different boots on the ground over here as well. All right. So, you know, and then also we're looking at facilities kind of over in this area as well too. So we'll have to get a boots on the ground person. So our goal is to create many portfolios of like 300 units. It could be for us to be probably 2 facilities or 3 facilities or 4 facilities, right? That's kind of how it is for us. And that is that's like how we do it. All right. So you know, because like when you sell them as a portfolio, it's stronger than like if I just sold this one facility for Warm Springs, you know, by itself, I would not be making, you know, that much money on it, you know. But if I can build 3 or 4 within like a 30-minute or 1 hour, you know, drive, then and have like 400 units, that makes it so much more stronger. And like especially bigger players and stuff, they love like, you know, bigger portfolios. Okay. All right. Okay, now let's get into storage. I wanted to show you what this looks like if I can, so you know where it's at. Now here's the numbers in storage that I just pulled up, and this is our Warm Springs facility right here. Okay, there it is, Warm Springs. And this is as of today. Now remember, rent is due on the 1st. And like, you know, 40% of them, as you can see, have not paid by today. And typically this is going to be your job when you first buy a storage facility, is like the first week of the month is just like, hey, I haven't paid. Hey, I need your money. Hey, you know, you're texting and you're trying to get everybody to pay. Okay. And as you can see, we're as of right now, we're 76% occupied. That means, like I looked here, there's 6 vacant. There's 6 units that are vacant right now. And I'm going to tell you why there's 6 units vacant, because we just raised the rates. We literally like almost not doubled them, but almost doubled the rates. Okay. So we had a good, like from every facility that we doubled the rates on. I mean, we took them from like, you know, pre-COVID rates to like market rates, like in the, you know, in the course of, you know, over the course of the last couple of, you know, last year or so. I mean, you know, you just have to, we brought everything up to market value, essentially is what we did. So we had a handful of people leave, which isn't really that big of a deal, honestly, because we'll get those back. You know, it just takes a little bit of time to get those back. And then there's 1 unit right here. I see it's black. It's complimentary. So I'm guessing that's the owner's unit, right? Okay, so so that's probably where like all the stuff, you know, for like to take care of the facility, like when DJ is that boots on the ground person that goes there, when he goes there, what he needs and stuff. Okay, probably blower and whatever he does. I'm not sure what he does, what he needs there, latches and stuff. But okay, so now you can see we have 32 tenants, and we have, yeah, so out of these tenants, you can see that a couple of them just moved in, and then one's been there a little bit longer, and then one of them's been 7 of them have been 6 to 12 months. 13 of them are 1 to 2 years. And then 7 of them are 2 years plus. This is the one thing about tertiary market, and is that they do stay quite a long time, honestly. And you know, so when you're raising rents, essentially raising rents in a tertiary market is different from a secondary market, is different from a primary market. Primary market, they're just like you know, whenever they feel like it, they could just raise rents, you know. So it's just like there's There's no rhyme or reason. It's just like, oh, market value's up, let's raise the rents. Okay, we raised it 3 months ago, we can raise it again. Or they could say, like, we raised it last month, they got to raise it again. Or they could say, let's do it every 6 months. Typically, in a secondary and tertiary market, you're doing in a secondary market, we're raising our rents every 6 months. In a tertiary market like this, it's anywhere from 6 to 9 months. Okay, just so everybody knows. So this is not like pushing and pushing and pushing for increases. Okay, this is really, slow and steady wins the race.